derivatives of BB Energy. Good morning, Omar. Uh,
Morning.
a lot of drama, but we seem still very much range bound.
Yeah, I think basically that's right. So range bound on pretty much everything. So the oil market is still correcting range bound. It put a high in at 68, it put a low in at 57, and it's trading at 63. Bitcoin range bound. The S&P also looks a little bit range bound, but I think it's going to go higher. So I think basically, not much has changed since last week. The view is higher across the board. Yeah, not much has changed. We view it positively.
We're seeing oil prices down a little bit on the open in Asia this morning, according to the sort of news reports. Generally, market down on the demand erosion in India. Do you think that is a big factor? I mean, besides moving a little bit up, a little bit down on the Indian news, is there a big move that could still come from the India story?
No, I think basically, if you look at the headlines from Reuters, if the market moves down, its market drops due to COVID worries and worries about demand. If the market moves up, it's bullish demand trumps COVID and worries. Well, yeah, I've seen maybe like 15 or 20 of those headlines. So it depends which way it moves. If it goes up, it's bullishness is trumping everything. If it moves down, it's worries. No, I don't really think it's got anything to do with India and COVID numbers and any of that stuff. No, I think basically the world is recovering. You've had like these vaccines, people are upbeat. Money is or liquidity is everywhere. You'll still have people that say, this is the not, the end is near and all this kind of stuff. And yeah, very possibly. But the thing about things that kind of collapse markets is that you never see them coming. Or at least I never see them coming. I keep trying to watch for them, but I never see them coming. And they could come this week, they could come in 5 years, or they could not come at all. So I tend to not want to kind of worry about when they come because I never see them coming. So for the time being, upwards and onwards across the board.
Upwards and onwards, or at least across the world, to Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Mike, even Warren Buffett is screaming about Bitcoin. But that aside, your thoughts on the market? It seems the U.S. economy is still solid, but there's nothing really there to give this oil market an impetus to break out of its range.
Yeah, I don't think it should break out of its range. I'm actually typically when I look at crude oil, I want to talk about. I'll pull up a weekly or monthly chart. Lately, I'm pulling up the yearly chart, and because the last few years the high's been around 72, and what have we done this year in Brent around 72? And I think there's 4 key things that need to happen for crude oil to really stay above these levels. You need basically demand has to come back, and I sense a paradigm shift. I mean, people are just work from home life, the flexible work schedule. They're not going to be driving 5 days a week, 50, 60 miles to work. We need OPEC to maintain its discipline. This is one of the most, I've never seen a period where OPEC's been able to discipline themselves as much. We see it on your headlines this morning. Russia's already looking to produce more. So that's the key thing. We need U.S. shale to not come back. And I don't see why that would be the case. The average, right now, WTI 63. In 2019, the average price was 57. So there's plenty of profit incentive. And we need the stock market to stay strong. All we need is that you get a little blip in the stock market and crude oil is going to drop double. So I'm bearish. And I think there's a key thing I'll end on is I think this has just been a blip in the commodity trend. And I've really been impressed how the whole pendulum has swung to bullishness. I appreciate that. But if you just look at supply demand schedules, commodities are going up because there's, as Omar mentioned, there's massive liquidity, there's massive stimulus. But the fact is that there's just not a lot of the demand for, and the supply elasticity remains the key thing. The key measure I've been focusing on now is copper. If LME copper can stay above 10,000, sure, there's a sign that maybe commodities will be okay and start recovering. But I think it's more likely it might pull back from here. And that means the whole complexes go down, because that's the one commodity I'm most bullish on in terms of where everything's shifting to decarbonization, electrification, and demand for metals, most notably copper. If that can't stay above 10,000, then don't expect crude oil to stay above 70.
Let's welcome Bora Barryman in London and managing partner of Hormuz Straits Partnerships. Bora, we're expecting some data points out of the U.S. this week to sort of reaffirm its recovery. Where April payrolls forecasts of about 1 million jobs were created in the month of April. The U.S. last week was sort of a glass half empty, with the India's narrative this week could be very much America glass half full, with these kind of bullish outlook numbers, including particularly jobs recovery in the US.
Yeah, I agree more with, I respect Mike's concerns, but I agree with Omar's sentiment that the economy is taking off. It's flying high, right? But if we're going to mix metaphors, I think we're also in store for some economic turbulence, because we're facing a lot of unstable cross currents. For example, the US growing very rapidly. The headline is strong, but as Berkshire Hathaway shareholders remarked, they're also seeing inflation. They're able to raise prices. Their suppliers are able to raise prices. And at the end of the day, another data point that came out last week is, the jobs are there, but the workers aren't there. So the data is showing us that workers are quitting their jobs at a rate that you would expect in booms. And, Jerome Powell says this is going to be transitory, and it may be, because some of these benefits that workers are getting may go away at the end of the summer, and let's see if people will be seeking work. But for now, a lot of Americans are making more on unemployment than they were making before the COVID shutdown.
It sounds like a good argument for raising the minimum wage. If you can't earn on $7.50 an hour, then you might as well be on unemployment. That's kind of an interesting juxtaposition. That is not from what I'm hearing from my home country of Ireland. There's a similar paradigm there as well, that the stimulus checks are greater than the earning power of particularly in the service economy, leisure economy. Omar, despite that, hedging against inflation by itself could be enough to keep this oil and commodity market elevated over the coming 12, 24 months.
Yeah, I mean, it's very interesting. I'm never a believer in, I haven't been a believer in inflation. I like the fear of inflation. I think that's what we're seeing now. So I'm not really a believer in inflation. I think Mike, his pieces.
What I suggest you do is order a new wooden fence for your garden, and then you'll suddenly discover
the
inflation.
Price of lumber. Yeah, I mean, yeah.
I've just put in a gate, and let me tell you, it's made of aluminium. I thought it was gold when he priced it for me.
Yeah, but I think in general, I started off the year by thinking that the dollar index. I started off the year thinking that we're not going to get inflation. I don't think we will get inflation. You need wage growth basically to get inflation. And I don't think we see that. And I think, the fact that we saw Amazon do all they did to not allow unionization, all this kind of stuff, and the same with all the big tech companies, I don't think we're going to see inflation. But I think, in terms of the dollar, I think the dollar, I was looking for it to kind of rally from the beginning of the year. It has done a little bit, but it looks a little bit weak. So maybe the impetus we get for commodities next will be basically a drop-off in the dollar as opposed to anything to do with inflation. I think the fear of inflation will stay, but maybe the dollar moves weaker. The dollar index needs to set a new low, below that 89% level, maybe get to 86, 84, something like that. and then rally a little bit, then fall off again. So maybe it'll be dollar weakness. I don't know.
Mike, the big story in the U.S., obviously, the one side inflation and so forth, but the other side is the continued stimulus. What is the outlook for this infrastructure bill? It's kind of gone quiet. Is it creeping its way through the Congress? We're already talking about the next big spending bill, the family education or whatever it was called, and yet the infrastructure one seems to be quietly meandering along. What's the outlook for all those spending bills? Is there any sense that there is a sort of an exhaustion with stimulus?
Yeah, I'm not sensing the exhaustion at all. I'm sensing a impetus to get things done as much as possible before the midterms, which is typically how it works. The Democrats have a mandate. They have a majority, and typically that gets pushed back to midterms. So that means 2 years, a little less now, and they're doing as much as possible. I fully expect more of it. And that's part of the reason it's the big picture. I'm bearish on crude oil because it's being replaced, and Biden's accelerating that. And that's one thing now that's big picture. That's massive big picture, but it's also the shorter term where it's just this work from life schedule. So I see a bull market in commodities, and I see it's in Bitcoin. And I don't see why anybody would be buying crude oil or even corn, maybe copper, and maybe metals. But you can't even buy gold anymore if you're looking for inflation, because gold's being replaced by Bitcoin. That's what's happening. And that's part of the reason we're in, I think, one of the most significant deflationary periods in history. And the U.S. Congress, it's just the absolute right time. When you can borrow at the lowest rates in history and hopefully put it into decent infrastructure spending, I think that's a prudent thing to do.
So you're confident this will get through the Congress
and buy a home?
It will get through Congress?
Oh, yeah. I think now's the time. Yes, I think it will. Yeah.
In the more immediate,
they have majority.
In the more immediate sense of the summer, the U.S. summer, which of course is the driving season, and then the flying or whatever part of that will be aviation. We're already trading July contracts. I'm just wondering, from the point of view of this sort of Uber summer in the U.S., what's the outlook for gasoline demand, aviation fuel?
Decent amount of comeback for leisure, but not for work. And to me, that's the big shift. You'll spend money for leisure. You'll hop in a car, less of an airplane. But it's that sentiment when you're driving 40, 50 miles or 50 miles, 60 miles a day to get to work, and you don't have to anymore, and you don't care what it costs because you got to get to work to make money. That's changed forever. And that, to me, is what's going to happen. In addition, if you just look at liquid fuel demand, motor fuel demand in this country, it's the exact same it was 20 years ago. And that's before EVs have kicked in. Now EVs are kicking. That was just because of thrifting and more efficient vehicles. So the big picture to me is the rest of the world is going to follow the U.S. and demand will actually stabilize and contract, and they'll actually find ways to come on supply. Maybe it's not going to be petroleum, but solar.
Bora, the other sort of big story creeping along we had is the Iran-US rapprochement talks in Vienna. They're still ongoing. They've just ended at the end each week, and then some headlines come out early in the week before they go back again, and they will at the end of this week. Generally, the sentiment appears positive. Your own thoughts on the outlook for that to come to a positive resolution, and is that likely to happen soon, do you think?
Oh, I've been very surprised by the news and the rumors that are coming out that the Biden administration and Iran are poised to agree some resolution so swiftly.
Even positive words between the Saudis and the Iranians in the last few days.
That's also correct. That this is just sort of an about face. I'm not sure what's driving that. But hopefully what's driving it is some type of diplomatic arrangement around Yemen. We all want to see the terrible conflict there come to a close. And the big picture is the nuclear deal, right? And the nuclear threat. That being said, I don't think the Iranian regime is going to change its DNA overnight. And I do think that will be, plenty of, let's say, friction points with its GCC neighbors for a while. But at the end of the day, again, as Mike said, these developments are bearish for oil because Iran will have more options for its barrels apart from just the Chinese state-controlled traders.
Omar, we've come through well, we're still in it to an extent, the earnings season, but nonetheless, a lot of the big headline have come through, and some amazing numbers in terms of profit from the major publicly traded companies in the US. But even that didn't seem to break this trajectory of oil price range bound, if you like, in the 60s. How do you put those two things together?
They don't go together. So one is, equities and earnings, and oil doesn't really care what Apple is making or what Amazon did or anything like that. I wish it was that easy. I wish basically you just follow headlines and you buy, and then you follow headlines and you sell. So it doesn't work that way. If it did work that way, it would be great, but it just doesn't. I don't. Earnings are very interesting, and if you want to look, so
I mean,
earnings were
ultimately,
positive.
the connection logically would be earnings are based on strong economic performance. Strong economy indicates consumption. Consumption indicates energy consumption, indicates more demand for oil. So that's the one and one is three. But maybe it's
Yeah,
not.
but no, I mean, what does good earnings do to a share price? If you think basically that good earnings means share prices go up, you could just look at Tesla. So good earnings doesn't mean. I mean, it's not a one-to-one correlation. I think markets don't look at what's happening today and what a company did yesterday and whatever. It's to do with future projected, whatever you want to call it. It's not as simple as 1 + 1 = 2, or even 1 + 1 + 1 + 1 + 1 equals whatever that is, basically. So, no.
Let me get my calculator out.
No, I don't think it works like that. So whether it be the equity market, I mean, all markets, no market is a kind of an island, right? But it doesn't mean that, the equity market could be going down, oil prices could be moving up, and vice versa. But if you get like a major crash, whether it be in oil or whether it be in equities or whatever it is, you tend to kind of, look up and say, what's going on. But I don't think there's a kind of a correlation between oil and the S&P.
Mike, I suppose underpinning my question is that there's been a lot of things that have been come along that you would think could put wind in the sails to elevate this oil price. I mean, with Goldman Sachs calling 80 as recently as last week, I'm just struggling to see how we get there if, record equity performance, forecasts of GDP growth, et cetera, isn't breaking oil out of this range, then what will?
Exactly. And that to me is part of the conundrum that's really kicking in. Part of oil to me is in one of the most significant deflationary periods in history. We have QE from the major G4 central banks around 55 to 65% of their balance sheets, yet just a few years ago it was around 10%. Most significant pickup in US money supply ever. So massive printing of dollars and currency, and that's what oil's all priced in. Yet the price is still hovering around the average price it has been. Maybe it's a little bit of the average price for the last 5 years. To me, that's because of just this massive kick in innovation. So that's allowing the Fed to ease, the Fed to actually, and most central banks add massive liquidity to the system. They're just catching up, which is keeping the stock market buoyant. What's really driving the US stock market? Tech. So to me, that's where Bitcoin comes in. Tech is a big part of that. So to me, this is what we're living now, and people typically don't understand these things until they look back at it from history. And that's why I see you just need every producer on the planet has excess capacity right now, crude oil, the ones before COVID. So what's going to happen with that? And I just look at OPEC spare capacity. It's the highest ever. How can you be bullish in that environment? I just can't see it, at least. And I dream of getting above 80, but I think that's from, and I know Jeff Curry, but that's from an analyst who's sitting in his apartment, not understanding that most people in this country are not getting in cars and driving to work anymore. And they're never going to, because they don't have to.
Bora, the banks had a pretty bionic earnings season. What does that tell you about where credit tightness or looseness might go in the coming period, particularly for oil producers seeking to rebuild capex expenditure?
Well, let's look back on 2020 or early 2021. The economists are pointing out that the velocity of money, which is really the GDP divided by the money supply, is at sort of a all-time low. We've never seen it this low, and I think that's due to the fact that banks have not been really doing their function right to put to layer capital into the economy in productive ways. They've been very cautious due to one, regulation, you could call it over-regulation, but also some high-profile losses in the trading sector in all the major markets of the world, whether it be Greensill in the UK or the Singaporean traders that we all know went down. So they have been reeling back and more cautious. And I suppose they have been able to concentrate on that top of the K. The top of the K has been, I would say, an investment grade segment. And this is reflected in the fact that, even with the recession in Europe, you did see the exporters of Germany increase their profits, increase their growth, while the households of Germany reeled back their spending. So, the banks are those systemic institutions that will be supported by this liquidity. They have it. They're be able to charge fees to investment grade names that are refinancing, that are bolstering their balance sheets. But this needs to get out into the real economy to drive the type of demand that would, let's say, result in an increase of consumption of barrels. And that's what we're not seeing. And, the economic activity, as Mike mentioned, is going on to Zoom. It's going on to these online platforms where people are working and collaborating. So there are these distortive effects of, where the profits of the future will come from. But certainly I would say banks will be an important segment of those profits. And finally, coming back to oil, I would say, look at whether you're satisfied or not satisfied with oil price, or whether you're bearish or bullish, all the majors swung back into profitability in Q1 after their massive losses last year. BP, Exxon, Chevron, they're all back in black, and I think the expectation is they will stay in the black for the foreseeable future. So oil is at a place where it is sustaining the top of the food chain national oil companies, as well as the top of the food chain majors. And let's watch closely that shale complex in the US, right? So you'll see when they increase their production, that's sort of a turning point in terms of market sentiment.
Staying in the black, that's kind of slightly double meaning there, but let's go to the survey question of the day to see where the room thinks this Iranian US election or US the talks are going. Do you expect an Iran-US deal before the Iranian presidential elections in June? There seems to be opinions back and forward that seem like a breakthrough is there, and then others not. So what's the view in this room on this question? And we'll go back to the panel on outlook for the week ahead. Omar, obviously it's Monday morning, market's just opening. We've got some holidays around the world with Labor Day weekend. Your thoughts for the week ahead?
I think basically, the markets that we see are managed markets. They are not real markets. They're basically markets that are managed either by OPEC, OPEC Plus, or the Fed, or a combination thereof. So basically, that's why I think people are so interested in stuff like Bitcoin. And that's what I see basically in terms of what you have to trade. So yes, oil has a lot of spare capacity, and yes, the S&P is grossly overvalued, blah, blah, blah. But at the end of the day, you have to do something, or you can basically sit on your hands and do nothing. But if you have to do something, in this kind of environment where you have managed markets, then what you do is you buy. And the reason is that the Fed will keep on inflating or trying to inflate. They've been trying to inflate since 2008. And if they fail, we go down the toilet. Not just oil, but the S&P as well. So the game is they try to inflate, they print more, they try to inflate. Some people think Bitcoin is the answer. I do. I think Mike does as well. So you buy Bitcoin, but basically you buy, because if they fail, if this market does go south, then we're going south in a big way, in a big way. So I'm not bearish on oil. I'm not bearish on the S&P, and I think that if I'm wrong, then nobody's going to give a damn.
You're going to need a lot. You're going to need a lot of energy to power up all those data centers for the Bitcoin universe. Maybe that'll be energy in itself. Just 100 million barrels a day to support the Bitcoin.
Bitcoin energy use is like 0.4. Electricity use is 0.4% of worldwide electricity use. It's nothing. It's absolutely nothing. It's just basically people want to scare you. They told you Bitcoin was useless and a Ponzi scheme and all the rest of it. Now they say Bitcoin is not green.
Well, Bitcoin and the Winklevosses will forever be an interesting marriage. The interesting comments made overnight, Winklevoss is saying that it's going to be on the balance sheet. But for the more of the central banks, that is, for a more immediate, Mike, outlook, again, the week ahead, some big data numbers coming in the US, labor, unemployment, and so forth. What do you think you're watching there?
Yeah, I agree with Omar and Bora. And the key thing is there's just so much money being pumped into the system. The market better to stay higher, because if it doesn't, it's just a deflational spiral lower. So the thing I'm watching most closely in commodities is LME copper. It's got to stay above 10,000 for any signs at all of a little recovery inflation. Otherwise, I see as just a massive deflationary trend that's had a blip, it's come back, and it's going to continue back lower. So that's the key thing I'm watching. I want to see copper above 10,000 before I think about anything bullish in commodities. And I think it's more likely if we just get a little bit of a 20% correction, which is what copper's been doing for 15 years, then that's just the deflationary spiral in all commodities. And from a commodity guy, I'm really watching growing season with U.S. crops, and I fully expect the biggest crop ever, because they've had the best incentive in 8 years to produce.
On any particular ags?
Oh, corn's the biggest one, because corn's is the connection with crude oil. It's the world's most significant ag in terms of dollar value of cost production. And I used to own a farm. And not only is it the profit incentive, but for 8 years, there's been so much improvements in technology with drones and seeds and all different things. This is the test. This year's the test. Unless we get a bad weather year, I expect the biggest crop ever. And that means that should push prices lower. That means excess of, more unleaded gas. That means more ethanol. So you basically need a drought. That's going to be the really key test. Now that's the whole summer. But right now, for next week, my key radar in commodities is watching copper, and I fully expect Bitcoin to continue to rally.
Bora, before we give you the last word, let's get the survey result out to see what the view in the room is. Sort of 50-50. Nobody knows. Your thoughts for the week ahead, Bora? Could the data point of the U.S. new jobs number be a catalyst, do you think, to propel oil prices out of this current range?
Let's watch and see. Janet Yellen and Jerome Powell have been stating that they want to get people back to work. That's why they're keeping monetary policy so loose. They don't see the employment numbers very strong. The unemployment numbers might be okay, depending on how you define unemployment, but the number of people in employment is way off where it should be, due to the fact that, again, the jobs are there, but the workers aren't. that's very interesting. You know,
And
and
we also
I
have
do.
the opening up of the British economy now with the vaccination rollout going so well.
That's opening, and actually, there is an important driver behind the Iranian talks. I think that's the U.S. withdrawal from Afghanistan, which is happening, and I think that's probably what's getting people's attentions focused to make the deal happen. There's really nothing changing on the ground in terms of all the ideological differences, but Afghanistan needs to be stabilized post America, and that I think is going to be underwritten on the back of more Iranian barrels. Again, that's a bit of a, let's say, a bearish factor on the supply side, but with everything inflating, then it might balance out in the long run in terms of the overall price.
Well, we'll leave it there for today. Our oil bull and bear agreeing on Bitcoin, so that's always a happy place. That maybe tells its own story. One thing of note, and of course, as this trend is all things upward and managed upwards, as Omar says. One sort of element of caution about the outlook for the week ahead is India. Not India, the tragedy and the scale of it is all there on our TVs to see. But I think the question of the COVID variant that is breaking out of India. We have a story on our Daily Digest today, just as an example of that. Jordan, there's been reports of it also appearing in the UK and other places. If for that it could become something, I think it is, inevitably one to watch. Thank you very much, Omar, for your thoughts and insight. Mike, New York, Bora in London, really appreciate your time this morning. Thank you, everybody, for joining us, and have a great week. All the best.